Hey, good day, everybody. Still here, Daily Market Pulse. It's Tuesday, March 18th. So we see stocks continue the rebound since yesterday, in this case with higher volume, so that's a pretty good sign. Otherwise, we have to still see just how high they want to take this thing, but certainly higher volume certainly adds to the mix. Still have 7 distribution days on the Nasdaq, 3 on the S&P. Still kind of an oddball sort of configuration in terms of distribution days there. Usually they're close in proximity. Nasdaq can sometimes lag. This time it's way ahead. Interestingly, everything went back up over the 8 moving average. So at least the short-term trend is still up. We do know that the long-term trend has been up. The intermediate trend has been fluctuating to some degree back and forth since these corrections have occurred. So right now, at least there's room to the upside. I'll show you that here right now. So Dow Jones, you can see the bull sash we had yesterday into the 8 moving average and 20 moving average, coming back over 16,200, where there was a little bit of a polarity area. Now there's still room to 16.4. There's still room to 16.5, of course. And then, of course, all the way up to 16.7 at some point, potentially as well. I think what I'll do here is I'm going to change and move this up here now. So back to 16.5 is your target at the moment, and then the 1272 would be 16.8 actually. That might be the preferred, but there might be a little bit of a hiccup, of course, if it goes through into this, of course, area here, 16.6 to 16.7 approximately. So anyway, that's what it looks like. It looks decent, but again, 8, 20, and 50 all kind of going sideways. So we'll see how things work out. It was oversold, as you can see from the stochastics at the bottom of your screen, and rising now. So there's certainly room to 16.5, you'd think. We'll see exactly how they're going to proceed here. S&P. So there's a rebound, morning star formation, which I like. It got right into the 8 moving average. Now, of course, closing above, a slightly rising 8, a rising 20, but a flat 50 in this case. Room to 1885 in this case as well. Support will be back to 1850, 1840. Looking for a breakout. Now you can see, based on the configuration, the trend is still there. So any kind of a push through 1880, 1885 gives you room to 1900, that beautiful round number, and all the way up to the top of the 1272 extension, right where 1920 currently resides as well. So that's always a possibility if they can do that. If they can keep going, including surpassing these recent highs, then we will end up losing distribution days, either one by time, but also based on price action and movement. So that would bode well for the bulls. But until that time, things are still a little dicey. We have to watch out between here and going into resistance just to see what's going to happen at these levels up above. All right, let's go to the Nasdaq. So we had the drop into 42.50 with a rising window yesterday, a little bit of a retrace as you saw when it hit the 8 and the 20-day moving average yesterday, that upper shadow. Nonetheless, a window. That was where the support level was going to be, including a former window that was present at very similar levels as well. So the level of support was there into 42.50. Of course, they didn't take it through. They actually went higher on the open as well as higher on the close, finishing near the session high on higher volume as mentioned. So at this point, everything still seems to look and point toward going back to the highs, in this case, 43.70 to 43.75 with room to 4400, another decent round number right at the top of the channel once again. And of course, the stochastics here as well as likely as, or as similarly as it was on the S&P and Dow Jones, we see the stochastics having coming out of an oversold situation and starting to turn and curl up. All right, TSX for our Canadian friends. Wasn't sure how this was going to react based on the fact that it looked like it was trying to roll over, but it was going to start breaking below 14,200. Then we saw immediately we'd see 14,000 below where the 50-day moving average was, but it bounced beautifully. Bollinger Bands are tight, but now starting to spread just a little bit with this volatile move that it is found here in the TSX. Testing the recent highs, but also now breaking above all of the recent highs as well. So when you look closely in here, I'm going to bring this and expand that. You can see all the highs. The highest points were right here, and you can see the breakout right there. So it broke out, and I think that's a significant enough breakout at this point that even if it goes sideways, it may very much hold that level. The 8 moving average is not quite rising yet, but the 20 has been rising, and I still think there's relative strength in here compared to everywhere else. The DAX continued its bounce higher, confirmed a reversal yesterday, not the day before, but yesterday, because there was no positive or bullish candle that occurred at 8,900. That was A green candle, yes, bouncing off a support area, but not actually a true reversal candle. Yesterday at least confirmed some kind of an upside move to some degree, looking for about 9,400, probably 9,350, 9,400 as a target. It's already tagging 9,300 as of today with a little bit of a spinning top formation. That is to some degree a percentage retracement. So if we go top to bottom here, you're going to see it actually went into the 38.2 and actually tagged the 50%. So it may want to come into that 9,300, 9,325 area once again to further test it, but we'll see if that's the case here on the DAX. So US dollar, Canadian dollar coming off the 50. I was saying that at this point, if it's going to bounce, it'll have a target up into 112, 112.50 area. Sure enough, decent move today. So still looking at those higher levels, despite the fact that, of course, there's resistance all the way across right here off all those highs. So it's kind of jammed, but you can see based on the 50-day moving average and a series of lows, it's somewhat of an ascending triangular formation, which can, in fact, could push through. Bollinger Bands are still tightening, but if they can open, create some room, you're looking at 112, 112.50. We'll see if they can bust out of this particular formation with this rising 50 driving things higher. Euro, while seemingly stuck at 139.50, still looks bullish. There's no bearish candles as of yet, other than that dark cloud cover, but it's still sort of testing 139.50 as well as not quite having yet tested the dark cloud cover high. So watch for that to see what they do at those levels, but there's certainly room to go higher here from this point forward. Let's take a look at the treasuries. 30-year June contract, we're seeing hit 134, as we know, has faded back since that time frame, but into the 8 moving average and holding after a crossover of the 8 back over the 20, and the 20 still rising. And the 50 moving average below still rising as well, with room, of course, still to 134 for a retest of that level again. All right, Japanese yen. Yen's been switched over to the June contract now, and you can see the bounce off the 50 that's been rising. The 8th now crossed over the 20, so now everything's stacked correctly with a resistance across 98.50 to 98.75 and a move possibly to 99.50 as a possibility there as well. We'll see if they can manage and accomplish that a little higher there as well. So we're seeing treasuries, yen trying to go higher. We're seeing the markets trying to go higher all at the same time. One of those has got to give way at some point. Gold, of course, flashed a sell signal yesterday with a dark cloud cover, especially with those upper and lower shadows. It was a little undecided as well, all at the same time. But through the Bollinger Bands on 3 consecutive closes and then reversed yesterday. Now, of course, further declined, but right back to 1350, which was where the breakout area was. It could go a little bit lower, but I think this is a great place for it to actually find support and look for another higher level from here. Let's see if I do a quick extension. I'm just curious now if I go from high to low here. See, the 1272 was met with a dark cloud cover and then reversed. Now back to 1350, which would make sense. The 20 moving average is right there. The 200 is flattening. The 50 is about to cross over. So look for some potential support right here at this level. Maybe 1345 to 1350 in particular, and then looking for another move higher into 1390, but more so 1420, which is our next target at the 1618 above. So silver still lagging. It dropped into the 50-day moving average as well as the original breakout way back at 2050. So definitely lagging in terms of configuration and construction relative to the gold index. Gold futures, but in none in this case, I'm still looking for a support in this level. You see that lower shadow from today. You see a little bit of a green candle starting in the after hours trading. Looking for a bounce from here, just as I was thinking the same thing with gold, up into the higher levels, 2150, 22, 23, ultimately are the targets above. Any kind of a breakdown below 2050, then of course you're coming all the way down to 1950 or even 19. Crude came back into that support area of 97, ideal 98. And formed a Dichotomy, then a Morning Star, then came back to retest it yesterday, if you recall, and I was still looking for that support to hold, and if it was going to hold, I'm looking for a decent move back up to the upside, and sure enough, bullish piercing today. Did not quite get through 99. It still needs to get through 99, ideally above the 8 moving average. If it can do that, then of course things look a lot stronger. 100 would then be the next target, particularly 101 on the upside. That would coincide very closely with the 200 as well as the 20-day moving averages as well. And I believe the 50% retracement from this recent high-low, yep, that's about right. So 101.03 is exactly the 50% retracement. So I'm looking for that on a decent move to the upside with these bullish candles that we're seeing here at this support level right now. So let's move over to the small caps. Small caps always being risk on, in my opinion. Came into the window, held the window as well as holding the 20-day moving average. Bounced with a rising window yesterday, got right on the 8 moving average, and then now catapulted itself through 119 to 119.75. Then right near the highs up here that are currently, let's see, the highs at about 120.55, currently right around that area. So still room to that. And then looking for a possible breakout. This looks like a complete bullish pattern that would be a simple flagpole with a flag, and a bullish pattern that would determine somewhat of a breakout above from that point, which could be quite substantial if in fact comes to fruition above 121. So let's keep an eye on that one as well. The VIX, on the other hand, after 2 consecutive closes outside the upper Bollinger Band and into a resistance zone at between 18 and 19, faded aggressively yesterday, as we know, on a gap lower on the open, and then did the same thing again today, a little gap lower, but right into all of the moving averages, which are all in a confluence. The only one that is not confluence here is the 8. We have the 20, the 50, and the 200 all right here at about 1450, 1455, 1475. With support, of course, immediately below at 1350 for the time being. So there's room to the downside here, as there's room also to the upside for the markets for now. We once again, if that's the case, if they reach these levels, we need to once again take a look at what they're going to do next.